Good morning. This is Orderflows Trading, the European recap. Today I'm going to talk about divergences, imbalances, and the Delta Scalper. My name is Michael Valtos. I'm the founder of Orderflows.com. Quickly, my trading method and teachings are based on order flow strategies that I've developed over many years of trading various futures markets. I do not use moving averages, oscillators, bands to back my trading decisions, nor do I combine them with order flow and teaching per se. Furthermore, I don't use any of the preset order flow trading methods circulating free over the internet. Rather, I trade my own methods. That is the culmination of my 20 years of trading futures on an institutional level. I've traded, I spent 8 years at JP Morgan. I spent 4 years at Cargill. I've spent 3 years at Commerce Bank, another almost, 2.5, almost 3 at Man, EDF Man, the commodity, the UK version of Cargill. What I'm teaching you is based on, tried and true methods of reading supply and demand. So without further ado, I'll just jump right in. But first, a quick disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, so today is Wednesday, April 13, and I hope to get the room back up and running soon. I just have some personal issues I'm dealing with. I've got my children have been quite sick, and one was hospitalized for a high fever a year or two ago, and so every time she gets a high fever, we're very nervous. So I've had to attend to that. That's more important than the markets. So the markets will be there every day, but I don't want to spend any more time in a hospital unless I absolutely have to. But anyway, jumping right into it, this is the the Bunds FGBL. This is April 13 is today. It's Wednesday. This is I use a 4-range chart on the Bunds. I like 4-range charts for most products actually, especially interest rates. I feel that it works works quite nicely. I mean, you don't have to use the same type of charts that I use, but it's up to you what you're comfortable with. I'm very comfortable with 4-range chart. I like to see how price moves from level to level. I don't expect, I don't want to see price move from, one price level to another just, because the time is up. I don't want to see a new bar form that way. I want to see, how the market rotates around prices. So, 1 a.m. Chicago time is when the market opens, the Bund market. Futures open, ahead of cash, which I believe is around 2 a.m. That's why you see it really start to pick up after 2 a.m. Now, on my chart, I don't have the highs or the lows drawn. I mean, you can do that if you go into the settings of NinjaTrader under indicators. You can find it under current day open high low. That will give you the that will plot out the lines. That's just, on some of my charts you see the lines drawn. This one I don't have it. Sometimes the way NinjaTrader is a bit funky in that sometimes you just open up your charts and what you had on there before is gone. You just got to go in and put it back in. But I know from my indicators what certain things mean. I know that this is a divergence here, this red down arrow, red triangle rather. I know that's a divergence signal. So okay, so the futures open at 1 a.m. and we start moving up. Usually, I mean, the first hour of the Bunds is, I don't know, I don't usually trade it. I look at it, I watch, I watch it, after I don't, not in front of my computer at 1 a.m. Chicago time, but, what's traded is still important. You still have to, I'll say analyze it, but look at it and, sort of see what's happening. So, I know the market is starting to go higher here, and as we're going higher, we're stringing together all this negative delta here, 382, 597, 596. So I know that there's some selling coming in there, but we just managed to just keep going higher and higher. So obviously the buyers are, even though the sellers are in control with a total net deltas being negative in each bar, there's still it tells me two things when I see the bar, when I see the market going up with negative delta. And one is telling me obviously sellers are taking over, but at the same time you have buyers bidding up the market, not in the sense that the market's going higher and people are lifting the offer, everyone's coming in saying buy, buy, buy. People are going on bid. They're not going out and buying the offer. They're not lifting the offer that would be causing the delta to be positive. So again, it's the first 15, 30 minutes, thereabouts, that we're doing that. Now, again, the future's open ahead of the cash, and what does that mean? Well, you have a slightly different sort of participation. You don't have people trading cash against it. I mean, people are trading 10-year futures, U.S. 10 years against Bunds at that time, but no one's trading cash Bunds against the Bund future. So I sort of like I said, I watch it, but I don't really participate at that time. That's just me. So anyway, so what I'm seeing here is even though you're going up and up and up, and you have strong negative deltas, 382, 597, 996. As you're making new highs, and as you get to this high, it's very strong negative delta. It's telling me somebody is bidding it up, right? Basically, people are coming in and selling it to them, and but they're supporting the market. You can sort of see these points of controls towards the bottom of the bars. So you could just sort of see, when a market's trending, right? You look for the points of controls to be, your support in that move, and you're seeing it, and you're seeing ratios, that you like, the blue numbers underneath. You're not seeing it on top. So it's telling me, people are supporting the market. You're seeing prices below being rejected, and the market's going higher. Now again, you got a high, you got a divergence, but no ratio. So I'm not really interested. Here another one, no ratio. I mean, this is ratio 2.81, but it's not a blue number. It's not a ratio that I like. And we're just working our way up still. Get this buying imbalance right as we take out the high again. This high. Okay, but again, it's still pre-cash market, pre-cash trading at this time. We get up to this, right at the high there at 2 a.m., which is about the time that the cash market should start trading. Okay, so 2 a.m. again, we got a strong negative delta, 800. We come off a little bit, just as we came off a little bit back here. Well, it went with a ratio. This is a small print, a single print. Here you got a ratio of a ratio bounds low, indicating some support. I say stopping volume, but it's support. When it's on a green candle, where it goes up, it's indicating support of the market, and we go right up here. I'm not saying that this one is a tradable one, but I prefer to take that sort of at swing lows. I'd hardly call 2 bars off the high swing. But anyway, so we come back up and make it a new high. So again, just sort of talking about what I've follow up on what I've been trying to impress on you guys is just because you have divergences, you should get more confirmation than just the divergence. Because on a trending market, you're going to get pullbacks. You're going to get pullbacks, and it's going to cause you to get some divergences off and on. Like here you got 1, 2, 3 already, and 4. Now you get up to this one here at 241, and you got a divergence and you have a ratio. That's what I like to see. We started coming off, but then we got a single print down here. You got a ratio of 105, which is a bullish signal. So if you're getting short off of this right here, the order flow is telling you to you know, at a minimum, be very careful. Be be wary of what's going to happen next. And if you're short and you got a bullish ratio, be careful. And what does it do? It just it strings together two ratios, and we make another high. And this time there's no divergence, but you got a ratio up there of 0.8 of 87, which is a number that you like to see. But it's up to you if you want to take that. Sometimes I do take ratios by themselves at highs, but I take it all in context of the market. I know that today is, so far, up to 3 a.m., it's been a day where the market just keeps going higher and higher and higher, and comes off a few points, a few ticks, 5 ticks or so, and then goes right back up. So, I'd be a little bit wary about that. I'd want, what I'm trying to say is I just want a little bit extra confirmation. It's not a bad trade to take, but I mean, it's a day where you just might want to be a little bit careful. You just see new highs being made. It's one-way street, and do you want to be shorting every new high? If you get a few things together to tell you that now is probably the chance to get short, then okay, that's another story. But if you're just trading it because it's it's a high and you have a ratio, be wary. I mean, you can, I often do, but just taking it in context that we've already made about 6 new highs with divergences and they've all failed. This tells me that this could be setting up for a one-way street day. And those are the types of days that if anything, you want to be positioned to the long side. You look at a candlestick, and it's those big long candles, those big ones that have the 100-point range where it opened on its lows and closed on its high. Those are the days that give traders excitement. But anyway, just going back. So you could have taken it, and you would have got about 5 ticks out of it at best, I think. Before it turned around and started going back up. Now, again, you get a new high right here, where you have this ratio of 191, and you have a divergence. Now, you had one here, it failed. You have one here. It's this is a dilemma that a lot of traders face. Is you have the same setup, but the previous trade failed, and you come across the same trade setup a second time, and then they start to panic, thinking, I'm going to wait and see how it's going to work, because I just took a trade based off that, and it failed. I lost money. Well, if you're going to think like that, you're going to think yourself out of the trade. Part of trading is being able to make the decisions, stepping up to the plate when it's time, time to play. If you're going to chicken out every time, you have a setup, then, you're going to miss a lot of setups. And, as luck will have it, Murphy's Law, rather, you're going to try to, sort of micromanage all the setups, and you're going to end up taking the trades that fail and passing on the trades that win. So, I mean, that's what I talk about when I say you have to be, you have to have the courage, I'll say courage, but, the discipline to understand what you're doing, and that, trading, there are losses in trading. Okay, you have to accept that. I'm not going to say it's the cost of doing business, because it's not. I think that, oversimplifies things. It's, it's there. Okay, and trading losses happen. Not every trade is going to be a winner. It's, you could have the best system in the world, right? That's 100, that's right. Nothing's going to be 100%, right? But there's systems that are very close to it. But you don't know when an order is going to hit a desk at UBS, telling you that's going to say buy me 5,000 Bunds, and start now, right as you're about to get short the market, you know, so you don't know what's, you know, other people are about to do in the market. You know, the best you can do is trade off of what you know and what you've seen happening in the market. You know, and order flows is, you know, order flow is the key that will tell you what's happening in the market. So, you know, we're coming up here and you're seeing, you know, every time you're hitting these highs, right, these last few highs, you're getting ratios now. You know, you got 79, 87, 191. You know, you're seeing the numbers 7, 14, 6. It's, you know, we're sort of testing these, you know, every time we sort of hit these, you know, I call it weak highs, but, you know, these highs don't look that convincing. You know, we hit it, come off of it, hit it, come off, hit it. You know, I'm sort of looking for it to come off again because we just, you know, hit it, came off, hit it, came off, hit it. Now we're starting to come off again. Now, you know what I do like is when you hit a high, you know, and you got the negative delta. You know, the next bar again also has a negative delta, and then the next bar also has a negative delta. To me, you know, that's you know, that's a sign of, you know, a market shifting from, you know, demand to supply. You know, what's driving this market up is the demand. Now what's about to drive it down is the supply. And you're seeing it, you know, you're seeing the delta is all here, negative, negative, negative. So, you know, you're getting short, you very easily, no question about getting short in this, you know, off of this bar here, in this next bar, anywhere between, you know, 62 to 64. I'm not going to say you could get short at 65, but, you know, 64, no problem. It's, you know, that's the point of control. It traded, you know, what is that, 5,000 lots there. So there's ample opportunity to get short here in this level here. And, you know, so we'll call it 63. You know, and what happens? You know, it's the path of least resistance. You know, I expect the trades to happen pretty quick. You know, so you're short at 63. What happens? It just comes right back down, you know, straight down to the 43 level, where you're starting to get, you know, some, yeah, you got one bar with positive delta, okay. But, you know, it's the first green, you know, green delta that you're seeing anywhere in this move. You know, it's a 20-tick move in the Bunds, which is nice. You know, and we just sort of go sideways. You know, so you can sort of figure that, okay, you know, maybe I should think about getting out, you know, somewhere in here. We're just sort of going sideways. You know, what's going to happen is the market just sold off 20 ticks. You know, you don't see anything necessarily in the ratios, but you're starting to see some delta, you know, positive deltas building up here. So, you know, if anything, you know, okay, you're thinking, well, now we've hit our low. You know, you're seeing the buying come in the positive deltas. And, you know, it's decent positive deltas. You know, it's 1,200. 500, you know, 300. You know, if anything, you know, that alone would be telling me it's, you know, the market's getting ready to sort of put in a base and maybe start to take off a bit. You know, I see, you know, I'll talk about the Delta Scalper a little bit later, but, you know, what does it do? You know, it pops up a bit here. You know, it goes, you know, from this area where you're trading around, what, 44, 45, you know, up to the 54, 55, you know, so that's another, easily another 10, you know, 10-tick move. You know, then you start, you know, then you see it turn here with the negative delta, so, you know, you'd be really looking to get out somewhere in this bar or even this bar, so, you know, maybe you'd get 5 or 6 ticks out of it. You know, it just sort of goes sideways here, coming into the U.S. Open here. In 7:30, there was a number that came out. But, you know, again, let me just talk about a couple of things here real quick to recap Delta. Okay, well, you have this one buying imbalance, you know, and stack buying imbalance. Yeah, I like stack buying imbalances, but I don't like them when we're taking out the highs. Yes, you can go and take out highs and keep going higher the rest of the day. That does happen with regularity. But for me, you know, I like to get short, you know, have a reason to get short up at the high, rather than necessarily be looking to get long all the time. You know, I used to be a breakout trader, but now, you know, I've changed that over the years. Just because, you know, I found, you know, trading breakouts, yeah, you get the breakout that you're looking for, but it only breaks it out by 3 or 4 ticks, and then it comes down, you know, and it's come off the high by, you know, 8 ticks or something, you know, and you have to have risk management. You have to have stops in place, and oftentimes you'll get you get stopped out, or you're sitting there having it on. By the time you get out too soon, and the market turns around, makes another new high. It was just not something that when it worked great and makes a lot of money, but when it doesn't work, it fails quite miserably. But anyway, let's talk about this delta scalper here. So this is the delta scalper, this blue one. Don't worry about this. This is something else. But this blue is, it's telling me that you're seeing a shift in the delta. You just had this nice big move down, and you're starting to see the first signs of solid buying coming into the market. Now, when I've said I've been around the markets long enough to know that when, I hate to say when everyone else is buying, rather, when the big traders are buying, you buy also. Everyone's to say, oh no, when you're supposed to, when everyone's selling, you should be buying. Well, that's in certain cases. That's in capitulation markets where everybody's just getting the fuck out and they don't care what the price is. But what you have here, you have a move. It's 20 ticks, and you come down into this level, and you're starting to see strong buying come in. This is not weak buying. This is strong buying. You're seeing strong delta. 800. If it was weak, it'd be 200, a positive delta of 200. But it's not. It's strong. It's 800. It's your first strong delta. Since the peak right at the high here of 2000. The delta of 2100, and then we start to come up. It kicks off another signal in here. Again, it's telling you, the buying. It's telling you, as it's happening. It's not telling you, oh, way back over here, look to buy. No, it's telling you that everything's changed already. It's the buying has come in, and look to get on board. Position yourself. So if you're trading with this delta scalper indicator, I hate to call it an indicator, just because I think indicator is sort of an ugly word in the trading sense. But rather it's just alerting me that the big participants have sort of come in and they're starting to accumulate position. And you see the delta is 69, which is in this bar, is very small. And what's important is people are coming in and they're building up. They're buying in these areas. That's why it's kicking on. You got another signal right in here. 2 bars after it, and and then you see the market. 40. This is the 42, 44 area. We pop all the way up to almost 60. That's 58. Come off. 7 o'clock. Okay, this one 7:09. It's a bit, I'll say a bit dodgy. You got a number coming out at 7:30, and you got to be careful trading into any. If you're going to take a trade going into a number, you're going to take a trade. 10 or 15 minutes before a number comes out. Think, do you want to do that? Do you want to sit through the market, or you want to sit on a position through an economic release that you don't know how it's going to come out? I'll be honest with you. I'm no economist. I said I worked at J.P. Morgan for 8 years, and actually before I started there, I thought, gosh, do I really want J.P. Morgan? Am I going to be sitting around talking about yield curve analysis all day long? I hope not. And there's nothing of the sort. Believe me. It's a lot of these guys are a bunch of idiots. They just happen to be good traders. In any successful, in any business or any line of work, you're gonna get people that are very good at it, and they may not be the nice, friendly people, but it's not something that you think you can go to school and take economics. Yeah, I studied economics, but honestly, yeah, what I studied is it's nothing. You know, our chief market economist there at JP Morgan in Singapore, he was this guy, you know, he's a brilliant guy. I think he's left and gone to Citibank, Dave Fernandez, and but he's, you know, gosh, he studied all the right schools, you know, Princeton, Harvard, or whatever. He you know, worked for the Federal Reserve Bank of New York at one point. I think he taught at Johns Hopkins University, and you know, for his PhD, his mentor, or whatever you call those faculty advisors, I think it was when he was at Princeton, was Ben Bernanke, for God's sakes. So you know, and there's me with my, you know, just my regular undergraduate degree. But you know, I mean, you know, these big banks, they have research departments, you know, for fundamental analysis. You know, I'm not a fundamental analysis guy. You know, I do have my own analysis of the market, but you know, trading, you know, intraday in and out of positions, you know, order flows, you know, tops that. You know, you can have a macro view of the market, and you know, that's nice. You know, you want to see the forest, but you know, when you're trading intraday, you don't really care about what's going to happen. You know, well down the line, you know, most, you know, intraday traders, well, I'll say, I mean, for any intraday trader, you're going to be flat at the end of the day. You're not going to hold a position, so you don't really give a shit what the, you know, macro view is on something. You know, all you really care about is where the next 6 to 10 ticks are going to come out. You know, they're going to come in, you know, one direction or the other. So, you know, that's what the order flow will help you with. Okay, so, you know, so just basically, I guess the point I'm trying to make is I'm not one to try and trade around a number. I'd rather, you know, there's plenty of opportunities over, you know, the trading day from the European Open or even the Asian Open until, you know, the U.S. close. So, you know, if I gotta sit out for, you know, 15 minutes, you know, you sit out, you know, that's fine. You know, I remember back on, you know, back in the early days when I used to work on a desk, and, you know, we'd get, you know, at night, we'd have these, you know, one of my early jobs was working at the global macro desk at Dean Witter, and, you know, part of what we did there also was to execute orders for, you know, some of the bigger clients, the big banks. You know, in Europe, CDC is the big French bank, and, you know, the head trader there would, you know, numbers would be coming out. He'd pull his orders. You know, you don't want to, you know, he has his view of the market, and, you know, that's fine, but, you know, he doesn't want to just get whipsawed because a number came out. You know, that's where I learned how to, you know, the importance is stepping aside when these numbers come out, let the number come out and run its course. And then, you know, then you get back in. You know, but, you know, when you're just trading in and out all day long, you know, you got to take breaks. You know, you're not going to sit in front of a screen for 8 hours straight. And, you know, when a number comes out, it's, you know, it's you know, it's easy to look at after the fact and say, oh, you know, wow, the market moved, you know, 30 ticks, you know, off this number. I should have participated. Well, you know, you've got to realize how fast the market moves sometimes after a number. And if you're trying to trade around that number, you know, and you're positioned in the wrong way, you're thinking you're getting out at -5, you're out at -15, and, you know, you look like an idiot. But you know, so, you know, I'm always careful. You know, is the thing. You know, I try to make sure there's going to be enough time. You know, had I taken this trade, I'd be looking, you know, if it didn't pay out quick enough, you know, on the Delta scalper, you know, getting short here at around this 50 level, 50, 51. You know, if by the time the number came out, you know, I'm still around break even, fine, just get out and you know, let the chips fall where they may. Yeah, and what happened? You know, we did pop down a little bit, got down to the 47 level. You know, Delta scalper kicked off right at 730, and, you know, did shoot up, you know, from, you know, the 50 level or whatever this is, 50, 52, you know, the 60, 62, and then went sideways. So you see this move here, right? It's all 729, 730, 730, 730. This is all within the release of the number. You come back in 5-10 minutes later, and we're just sort of going sideways again. Then start to come off here. But anyway, that's the analysis there on the Bunds. I'll talk about eurostoxx in a second here. So this is the eurostoxx earlier this morning. Again, the eurostoxx opens at 1 a.m. A lot of these Eurex contracts open up at 1 a.m. Chicago time, ahead of the cash open. They start a little bit early there, and the market is going straight up. Again, this is the first minute here, so it looks like a big move, but it's actually, the first minute. And in the first minute, sometimes you do get, one-way direction, one-way action. But it's not say, oh yeah, you can buy here off of this. You got to be really quick and, make your decision. I don't like to trade the first few minutes of any market that's opened. And, right off the bat, you come off this high and you get a delta scalper signal. Now, if you want to take it, like I said, one, I like to wait for, the market to find its footing. I'm not a big advocate of trading outside of when the main market, when the cash market's open. But, you can, just be, careful, that's all. So, delta scalper, and it didn't work out. It came up, tested the high. I don't know if it would have been stopped out. My stop would have been somewhere up in here. So, it came back down. Now you got a divergence. You got a ratio. That's what I like. It didn't work out. You ran into another ratio here. Again, I know the cash is going to be opening soon in the eurostoxx, right? I know it's going to open up at, I think it's 2 a.m. Chicago time. And, that's when things are going to be picking up. So, I just don't see the need to be trading, in that sort of, it's not the pre-market. It's the market, but the market's going to move much more freer, or I'll say freer, but it's going to have its more natural movement once the cash is open. And so you're seeing a couple things here. You're seeing ratio here. This is 155. I know the cash should be opening soon, and do I want to be sitting through it's no, I'm not. When I trade the minis, 8:30, I give it about 5 minutes for it to settle down. So and then so again, right after the 2 o'clock open, you get a divergence, no ratio though. Here you got a divergence with a ratio, but it's a few minutes, it's 5 minutes for the cash open. And right now we're just sort of going sideways. The market's going to take time, it looks like, to sort of decide what it wants to do. I said, and on the S&Ps, I give it 5 minutes. Now we start to go up here. At 213, you got a delta scalper signal kicking off here. Okay, and looking at the bar, looking at the order flow, it's nice to have. I like to draw out stuff on the charts, but it's easy just to have arrows telling you, do this, do that. But you really want to also look at what's happening in the market. And, I see this level here at 29.11, right? We tested it 1, 2, 3, 4 times. Here you see 348, 52, 7. All of a sudden here you see 1800 out of, here you see 1400. You're seeing, at these two price levels here, especially in this bar, you're seeing a lot of support. And, this, the part of, the delta scalpers is picking up on that. You're having a lot of support now in the market, and people are coming in. The delta is about to pick up and take off in that sense. And, if you're going to be making new highs for it to be a strong move, you're going to expect to see more positive delta coming in. So, to me, this is, a much more valid signal. It's already, 13 minutes past 2, whereas this one is, just 7 minutes after the futures open. Good, almost 50, over 50 minutes before the cash guys come in. So, yeah, can you take this? You can. You probably would have been stopped out or gotten out at a loss. Even if, you have your stop somewhere up in here, 5, 6 ticks away. Maybe you're not stopped out, but, it's just, I tend to find that, say I get short off this and the market just gradually goes against me, sort of goes in my favor, goes against me, screw it. I'm happy to get out at a small loss. I hate getting into a position and just have it so, meander back and forth. I'm not going to sit there and try and justify it, for an hour. 107, you're getting short. And, if by 130 the market hasn't gone in my favor, I'm ready to turn mama's picture to the window and look to get out of the position. I'm not going to sit here and try and think, oh, it's going to happen, it's going to happen, it's going to happen. The market oftentimes gives you a chance to get out at a small profit or small loss. I won't even say scratch, but, a small loss, maybe sometimes a small profit, but, take advantage of it. Because you only get those chances once in a while. They don't always happen. But here you could get out at, a couple ticks loss. Take it. You're not going to sit here getting short at 107, an hour before the cash open, hold it all the way through the cash open thinking, oh, it's going to sell off, once the cash opens. No, it's not. If it hasn't happened already for an hour, again, it's a 4-range chart. If the move hasn't happened after 30 minutes, it ain't sure as hell ain't going to happen, after an hour, and you shouldn't still be in that position. And what happens now? So now you're getting, at 213, you're getting a buy signal, and the market starts working its way up. You're getting the positive deltas building up here. 2,000, 4,000, 1,000. This is a nice move from 29. What do you want to call it? 29.13, 29.14. It's a 10-tick move right there in the first 15 minutes after the cash open, basically. That's if you got out here. The market, it hasn't really given you any sell signal, nothing in the order flow telling you really to get short. Yeah, you have a couple divergences. You don't have any ratios, all right? Just because you have a divergence, so what? You need something besides just a blind divergence. Again, you got another divergence here, another divergence here. Like I showed you in the Bunds earlier, on a trendy market, you're going to get a lot of divergences. So if anything, it's telling me the market's trending. If I see divergences happening, one right after the other, without any ratios, it's telling me that hey, maybe there's some capacity for the market to keep making new highs. So you get long around the 13, 14 area. Now it's already trading in the 30s. It's if you got out, if you thought, well, we're going sideways here, I got a couple divergences, I should get out. Okay, fair enough. The deltas have contracted, 8, 236, 265, 100. You're seeing some signs of absorption right here, we're with trade happening in both directions. And, you can, there's no shame in getting out at 10 ticks thereabouts. When it starts going back higher, you feel like an idiot, but, there's nothing wrong. I take profits like that all the time. I'm not going to say you're going to, there's that saying, you'll never go broke taking profits. Well, you'll never get rich getting out early. But at the same time, you're reading, you got to read the order flow. You got to read it. But it's sort of here, it's sort of telling you that there's signs of absorption. Now, when you have absorption happening, what's going to happen after that? Well, absorption, you often go sideways, right? So what's going to happen after it is you're either going to go up or you're going to go down. And right now, it's not necessarily giving you much information that it's going to go up or that it's going to go down. If you're looking for some sort of sign, you don't really see any negative signs. You said you see some small deltas, but that alone by itself is not enough reason to be looking to get out. And we just start working our way back up. you know, making new highs with divergences. Nothing. Now, okay, now this gets interesting as you get up here. Now you're seeing some big selling come in here. You got a divergence. You see 4,000 selling imbalance, 3,800. But at that same level, right, you see a buying imbalance of 3,000. Now, I don't know. It's not a scientific thing. I'm sure someone out there would want to do it. I haven't done it. I've done it probably visually. That's the only way I've done it. But I always look at these levels where I see selling imbalances, strong ones, but then I see strong buying imbalance, following it. Or it could be the other way, where you see strong buying imbalances and then you see strong selling imbalances. It sort of depends on which way the market's moving. But yeah, when you see it in the same bar, it's it's a little bit different. Usually I'll see it like here. You see a strong selling imbalance in this bar, and then you see a strong buying imbalance in this bar. Oftentimes, I'm more inclined to get long. But what you're seeing here is, yes, you're seeing strong, 7,000 here, 3,000 here. You almost have one here. It's 535 against 2062. My ratio is set at 400. If mine was set at 390, this probably would have kicked off. But but anyway, you're seeing, what you're seeing is a lot of trade happening back and forth here at these same levels. So, is that bearish or bullish, off of these? Well, normally I would look at big numbers like this, 4,000, 3,800, as kind of bearish numbers, which they are, taken by themselves. And even here you got 3,000. But right after, you're seeing the buying come in, 3,000 here. And here you got a strong buying imbalance. Now you got ratio. Well, what's going on? The market just starts popping back up again. Now, this is one of the setups that I like to talk about, the 3 in a row. I don't necessarily like it when it's at a high, but you get, like I said, you can only do trade what the market's going to give you to trade. But what's interesting, you got imbalance, buying imbalance. So you got your 3 in a row right here. Ratios indicating there's good continuation. And you're seeing the buying in there. You're seeing strong deltas, 3,000, 4,000. You get a little bit of a pullback. This is your chance to get in. Ideally, I'd like to get in somewhere in this price of this bar, but it didn't pull back here. However, in the next bar, it did pull back into this bar, so you do have a chance to sort of get back in around this 40-ish level. Ideally, I'd love to get in around the 36, around this point of control, but the market never came back down. It only came down to 38 in this case. And this is probably one of those cases where you're trying to buy it. You're missing it. Luckily, it came back in here. It's giving you a second chance to get in, and but honestly, you really could have still been short from that buying imbalance earlier, or not buying imbalance, the delta scalper from earlier. And we're just going up. Now we're trading 60. What is that? 64, 54, and you have a divergence, and you got a ratio finally. So it's telling you, hey, maybe this move can be over. Like I said, you got all these divergences, but no ratios. This is the first one. So if you're looking to get short in here around the 48 level, 48's right here. And you got plenty of opportunity to get short in there. It did trade up to what is that, 51, and it did. Excuse me, it did come off. Down to almost what is that, 39. Before sort of coming back up to that same area. Where you're sort of starting to put in all these points of controls. At the same level. It's when I see that. When I see a lot of points of controls lining up, it's sort of telling me the market's going sideways. Well, obviously the market is going sideways, but again, just talking about big imbalances. Here you got 6,500. How often do you see such massive numbers like that? And here's 5,000 on the sell side, and the market came off. Here you got 6,000, and the market went up. So you should have in your mind imbalance sizes that you want to be on the lookout for not long-term moves, but short-term scalps. You gotta, sometimes you could add a few ticks here and there, you know, with sound reasoning and sound trades. And if you're just trading on a normal bar chart, you're not going to see these. You know, you're not going to see anything. You're not going to see these numbers. You're not going to know that, oh my gosh, you know, there's some strong selling in here, 5,000. You know, the selling imbalance, or you're seeing a strong buying imbalance here of, you know, 6,500. Now you come up in here, you come one tick off the high, and what do you have? You got a stack selling imbalance. And you got a strong negative delta, minus 2,400. You see some, you know, minus 2,700 here. Yeah, I really like to take selling imbalances near highs, near the high of the day, or, you know, swing highs, rather than taking selling imbalances near swing lows. You know, why is that? Because, you know, most of the days you're gonna have, it's gonna be non-trend days, you know, where the market just sort of goes back and forth. And, you know, so if you could sort of sell at the top of a range, you know, that's great, or buy at the bottom of a range, you know, look for it to trade back into value. You know, that's what I'm looking for. You know, so, and ideally I like to get short somewhere inside of the stack selling imbalance. So, you know, you have your chance right here at 51. If you did come in and traded, you know, close to 5,000, and, you know, it give you, you know, a 9-tick move, you know, before sort of coming back up into it again. You know, you got to be careful, right? You're coming into the 7:30 time. Do you want to be, you know, in a position at that time or not? You know, but I love this. You know, if anything, I would kind of short look for a quick move. Didn't happen. Doesn't happen. You know, get out with what I could get. You know, if anything, and, you know, just wait for the next trade. You know, again, you know, why I talk about, you know, not trading around numbers. You know, some people will throw stones at me and say, oh, you're an idiot. Well, you know, I've been around the markets long enough to know that it's not my trading style anymore. You know, I've traded through numbers. I've traded through non-farm payrolls. You know, I've traded, you know, S&Ps. I've held S&P. You know, back in the days, this is in the 90s. You know, I used to trade S&Ps through the numbers, and, you know, when I was on Globex, and I had a terminal in front of me, you know, the actual Globex terminal I was trading, you know, the old ones, you know, not before, you know, the GL system took over, but, you know, the old clunky ones. And, you know, that market, you know, that's when S&Ps were trading, you know, 500, 600, you know, big S&Ps, you know, one tick, or gosh, what was one tick worth? 25 bucks or something at the time. And, you know, it's crazy. You know, you could look and, you know, you just have a one lot on, and, you know, when the number comes out, it could be $400 against you on a one lot. You know, imagine if you're trading a multiple. Right, back in those days, I was trading one lots for my own account. But, you know, the same thing, you know, the same things hold true today. You know, when a number comes out, everyone's view of the market can change very quickly. So, you know, just be careful. Okay, so thanks for watching this European trade recap this morning from April 13. To learn more about trading with Orderflow software, I should change it. To learn more about trading with Orderflow and the software used in this video, be sure to visit my website, www.orderflows.com, or send me an email, mike@orderflows.com, if you want to learn more about the software or any special deals that I have going on. You know, just let me know. You know, it's Orderflows out there for everybody to take advantage of. Thank you.